Good afternoon, everybody, and welcome to this edition of our weekly Broker Moves Review for Friday, June 11. My name is Carl Capilingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we delve into all the big broker moves on all the big ASX stocks for what was a big week in broker moves. We'll do that after we talk about the Think Markets difference, which is substantial. $8 flat rate trades, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees for fantastic reasons why your next ASX share trade should be with Think Markets. Hey, and if you're new to the Think Markets family, sign up, get trading before June 30. Your first 5 trades are on us. There are some T's and C's, so head to the website for details. Hey, I've already done the agenda. We're going to talk about all the big ratings, upgrades, downgrades, price target increases, decreases, and then we'll focus on 5 stocks of interest this week, all from the mining sector, more specifically all iron ore stocks. Let's talk about the upgrades first. Now, each broker has a rating system for the stocks they cover, typically based around buy, hold, sell, what they think their clients should do with the stock. They also have a target price system based upon their valuation for the company, basically where they think the price can go over the next 12 to 18 months. So if we look at the first one, we've got Macquarie Bank on BlueScope Steel, ticker code BSL. Their rating has gone from neutral to outperform, and their price target has gone from $23.90 to $25.40. That's an increase of 6.3%, but based upon the current share price, that still leaves 11.1% to the target. So Macquarie quite positive on BlueScope. They're very positive on the steel pricing dynamics at the moment. So they're expecting higher steel prices to continue. And look, even if they do come off in the medium term, probably won't come off by very much. And that is going to continue to bolster BlueScope's earnings going forward. Macquarie were quite active this week. So not only did they have a little bit to say about their steel price assumptions, they had a lot to say about where they think the gold price is going, metallurgical and thermal coal prices, and also iron ore prices. And we'll see a lot of those resultant recommendations borne out in today's presentation. On this gold stock here, Dacian Gold, ticker code DCN, they went from neutral to outperform, retained their 32-cent price target, which still leaves about 13.5% from the current price to that target. Macquarie Bank said there were winners and losers out of their small adjustments to the gold price. Dacian happened to be one of the winners, but interestingly, Macquarie said that they're not completely bullish on gold prices going forward. They said that eventually the Fed's going to have to taper, and that would probably hurt gold prices. JP Morgan on National Storage REIT, ticker code NSR, went from hold to accumulate. They also increased their price target by 7.3%, which leaves about 5% upside there. They liked the recent capital raising by the company, kind of indicates that the company is hungry for capital to fuel their growth going forward. They also noted that NSR is potentially undervalued compared to its global peers. On Ramsay Health Care, Citigroup went from neutral to buy, so that's a nice jump there. Also a nice pop in the share price, about 13.4%, which still leaves nearly 20% of upside in Ramsay Health Care. Citigroup said that they think the worst is behind it in terms of the pandemic impact. Ramsay has had major problems due to the pandemic because one of their major businesses is elective surgeries and, of course, major disruptions. But light at the end of the tunnel for Ramsay. Heading into the downgrades now, not so lucky, Cleanaway Waste Management going from neutral to underperform at Credit Suisse. The price target also coming down from 250 to 240, that's about 4%. And Credit Suisse believes that the company is overvalued by about 10%. They noted that the share price had shot up recently, and also there might be issues with the digestion of a big acquisition that they have made, and potentially also still ongoing impacts of the pandemic. Macquarie featuring again on the next to New Hope Corporation. That's one of the coal stocks. So Macquarie tweaking their metallurgical and thermal coal price forecasts. Winners and losers, again, not so lucky was New Hope Corporation. They went from outperform to neutral. Their price target did go up by 13%, however, but in spite of that price target increase, Macquarie still feels that the company is overvalued on the basis also of a recent surge in the share price. On the bright side, Macquarie is confident that earnings are on the mend for New Hope. West African Resources, I said there were winners and losers out of their gold price assumption tweaks. West African Resources a loser here, going from outperform to neutral, but the price target did go up and Macquarie still seeing modest 9% upside. Credit Suisse on Woolworths going from neutral to underperform. They had some issues with the recent demerger and the resultant impact on the company's valuation, and also recent share price outperformance as well, just undermining what they perceive to be the value in the business. A very small tweak in the share price, and company still overvalued as far as Credit Suisse is concerned, and probably therefore justifies the underperform. Looking at the price target increases now, no ratings changes. Altium, lots of news on this one during the week. They received an unsolicited takeover offer from US tech giant Autodesk, caused a big spike in the share price. Credit Suisse increased their price target partially as a result of that, partially because they see that this indicates that we're probably just at the start of potential partnerships with Altium and other big tech companies. They certainly are not ruling out a potential higher bid for Altium coming in, although at the same time saying that the one that's out there was pretty good. 20% increase in the price target, still 20% upside even despite the recent share price gains, and an outperform rating from Credit Suisse. We'll come back to BHP and we'll come back to a number of iron ore stocks later on because they're going to be our feature stocks today. Let's skip to Brickworks, which had a couple of nice price target increases from Citigroup and Macquarie, respectively. Citigroup at a buy, Macquarie at a neutral. Both brokers reacting to the company's Investor Day and trading update. Both brokers quite confident in the outlook for Brickworks going forward, both acknowledging the strong performance of their property division and appreciating the significant revaluations to the upside there, and both brokers thinking that we're probably closer to the bottom of the cycle for their building products business, noting strength in the home building sectors in Australia and the USA. On Boral, they had a response to the recent takeover from Seven Group Holdings and upgraded their earnings guidance. Unfortunately, earnings guidance coming down to about 5% below what the market was expecting. Some brokers even worse than that. Look, we still got some brokers catching up with their target price assumptions here to the recent run-up in price post-takeover bid, and that's really the main reason for the 3% there at Credit Suisse, 14% at JP Morgan, 20%, nice one there at Morgan Stanley. But as we can see, more than fully valued at Credit Suisse, JP Morgan, and really only Morgan Stanley thinking there's anything left in it, and they have the best rating there at overweight. We've already talked about BlueScope, Chalice Mining, a little bit of catch-up, I would suggest, from Macquarie, but also part of their gold sector review. Still plenty of upside there and an outperform. Very nice looking chart. Go check that one out. Champion Iron's one of our feature stocks. We'll talk about that later. CRN, again, Macquarie with that coal price assumption update. A nice price target increase, 33%, but unfortunately company fully valued, hence the neutral recommendation. Deterra Royalties, one of those iron ore plays, getting a bump of 14% in its price target from Macquarie. 21% upside still seen there, outperform, very impressive. Macquarie also upgrading their earnings forecasts for Deterra by 11% in FY21 and 24% in FY23. We'll talk about Fortescue. It's one of our feature stocks later on. A small target increase, fully valued there at Macquarie. Mount Gibson Iron, another iron ore stock, nice price target increase, whopping 38.7% upside still seen. Macquarie confident with an outperform rating. They upgraded earnings by 30% in FY21 and 40% in FY22 on the back of those higher iron ore price assumptions. Mincor's one of our feature stocks coming up. New Hope Corporation, broken record, the coal price assumptions there, but fully valued at Macquarie with a neutral. National Storage REIT, we talked about that one. Heading into the second page, Macquarie also a small pop on National Storage REIT, but a bit of a theme there, overvalued to fully valued. We've talked about Ramsay Healthcare. Rio Tinto is a feature stock, and moving down the list pretty quiet until we get to Whitehaven coal, keyword, 35% upgrade by Macquarie, still 7% and an outperform on it, and it's their sector pick as well because it has exposure to both metallurgical and thermal coal. Having a look at the price target decreases, these are all pretty quiet, nothing too exciting there. I'll let you press pause, as you can in any part of this presentation, see if your stock's on screen. Okay, the promised iron ore stocks and Macquarie's comments on those. We can see here on BHP, the price target went from 57 to 61. Macquarie retained their outperform rating. The broker notes a double whammy benefit from their price target increases for coal prices and iron ore prices as well. We're looking at about 11% higher earnings in FY21, 27% for FY22. JP Morgan, they also tweaked their coal price forecast as well. A smaller increase in the price target from 56 to 57, but the broker did retain their buy rating. They see limited impact from those price target increases for coal on BHP's earnings because it's, relatively not a huge division for them, but they still like the company very much, saying that the valuation looks good and as does the balance sheet as well. If we look at the average broker ratings, we've got an average of a buy, 3 strong buys, 8 buys, 5 holds, just the 1 sell. A mean price target of $50.13, which will probably go up a little bit after these two are accounted for, but we're not far away from that. We do have a high estimate of $60. Looking at the fundamentals, enterprise value to revenue is about market average there, but I can see that falling because obviously revenue is improving. Price to earnings ratio, not fantastic, not terrible, but it is improving because we do have some earnings growth in the business. That's nice. And that is a very good PEG ratio because typically we want that to be less than 1. Price to free cash flow is outstanding, as is the return on equity, almost double the market's average of about 12%. So I have to give this a very big tick, and I'm going to give this an A. That's a tick for me. I think the chart looks pretty good as well. We do have a well-established long-term uptrend. I can't see anything too sinister in the short-term price action to suggest that this won't just keep trundling along to the upside. Look, if you've got it, 100% you would absolutely hold on to it. And if you don't have it, look, I think it's quite attractively valued myself based upon my own fundamental analysis, and would be happy to buy it therefore around these levels. So 3 ticks from me. Make of that what you will. Heading into the next one, Champion Iron. Macquarie raised their price target from $8 to $11, retained their outperform rating. Once again, those higher iron ore prices in play, but looking at the increases to their earnings, we've got 46% higher in FY22, 78% higher in FY23. Very nice indeed, and they can see CIA more than doubling their current earnings by FY26. We do have an average of a buy. Not many brokers looking at this one, but we do have 2 buys, 2 holds. Mean price target of about 7.03, but probably expecting to go higher as some revisions come in. A high estimate of $8. Having a look at the fundamentals, this is much better than the market, so that's outstanding. This is also looking very, very cheap, but you can see brokers, and these are not my numbers, these are broker numbers, brokers expecting the earnings to shrink a little as time goes on, so that's interesting. The dividend yield is coming, that's nice to see. Price to free cash flow is outstanding. We don't have any numbers here, we don't always get numbers from the brokers when there are so few of them around. Look, hard for me to give you a rating on those fundamentals. I do my own fundamentals though, and I can tell you that this one actually looks quite attractively valued at the current level. So I'm happy to go buy on this one. Certainly the chart is quite constructive, a very well-established long-term uptrend. We've had a little bit of a pullback, and really I just think that gives you an opportunity to get in. 650 looks pretty well supported. So tick here, question mark there, but I'm a buyer on CIA. Looking at Fortescue Metals Group, Macquarie, they retained their outperform rating. We went from 23 to 27 on their price target. Nice pop up. We saw a 21% increase in their earnings for FY22, 8% for FY21. The broker noted it would have been more if not for the fact that Fortescue does mine a lower grade of iron ore. Brokers a little bit more mixed on this one. We've got 2 strong buys, 6 buys, and then we see this diversion here. 7 holds, 3 sells, even 1 strong sell. It's quite a polarizing company. Is Fortescue mean estimates at 21.80, so that would suggest that the price is quite fully valued at this time based upon broker estimates. In terms of the fundamentals, this is definitely better than the market. This is incredible. I mean, when I say incredible, it's because it's hard to believe the PE can be that low, but it is because brokers generally are expecting earnings to fall as iron ore prices retrace. But I think as we get further and further down the track and iron ore prices don't retrace, we're going to see the types of upgrades in iron ore price expectations that we've seen from Macquarie today. I think these guys are just the first ones of many to come out and do this, and therefore I think we're going to see some of these price targets improve, some of these ratings improve, and I think we will move into more of an upgrade cycle for Fortescue. The other numbers are all very good. The return on equity, I would say, is the best in the market, but certainly in the best in the top 50. Look, this is still a big tick from me. I can't really fault that. This is a question mark, but I'm happy to go out on my lonesome here and call this a buy. I do like the technical picture. I like the fact that we are, moving out of this long-term zone. I do think we are consolidating under this level, but I think if we can break through some of these levels, we are going to go higher on Fortescue. It is quite attractively priced here, and based upon my numbers, and I've got it bordering on somewhere between sort of good and great value. Looking at mineral resources, price target from Macquarie going from 61 to 73. That is a big jump. They retain their outperform rating. Earnings are going 17% higher in FY21, 56% in FY22 and FY23. And the broker pointed out that they do like the company's lithium exposure as well. We do have an average of a buy here, a little bit polarising again because there is still a sell out there. In terms of the mean target, you can see how that lack of consensus amongst the brokers is impacting on this. We are potentially fully valued based upon the mean target. There is an upside of 61, which I'm guessing was Macquarie, which will now go to 73. So you can see that these numbers don't update immediately. It usually takes a few days to a week for some of these moves to come in here. Looking at the fundamentals, that is outstanding. That is excellent. This is fantastic. That's excellent. That's amazing. This is, it's an A+. It's up there with Fortescue. That's a tick for me. That's a tick for me. The chart looks amazing. I'm an out-and-out buy in mineral resources. I don't think it's as cheap maybe as BHP, CIA and Fortescue, but it's certainly not expensive by any stretch the imagination at all. Final one we have today is Rio Tinto, last but certainly not least. A big price target increase from Macquarie, 140 to 157. They retain their outperform rating. Looking at the order of magnitude of earnings increases here, 45% over the next 5 years. I mean, you can see where I'm going with this idea that the longer iron ore prices stay up, the more these types of upgrades are going to come through and therefore support these stocks going forward. And they're not expensive. That's the key. They're not expensive. We've seen how low these PEs are. And I think that's going to support share prices going forward. Chart looks fantastic. So ditto on many of the comments I've made there. The brokers in general are quite positive towards it. Maybe, if anything, there's a few sitting in the middle. The mean target is 125.75, which I would say is probably going to head up when some of these get factored in. And we do have a high target there of 173, which does show that there are brokers out there which can see a lot of upside in it. This is great. This is great. Happy with this. This is a big tick, and this is amazing. I'm definitely going to give that an A. So I'm tick, tick, and tick. I think I've gone 5 out of 5 buys here. BHP is, in my opinion, cheaper than Rio, and CIA, Fortescue very cheap. Mincor and Rio probably the least two in terms of valuation, but they're all on the better side of good value. Okay, that's it for me today. What a great session this was, and some fantastic information and 5 recommendations in there as well. You can catch more information just like this in our market news section of the website, or you can catch me or the Think Market handles there on Twitter. It's a pure coincidence that on Tuesday next week, we're going to be back in the mining sector with our top 3 ASX mining stocks. Hey, I might end up talking about one of the ones we've talked about today, but there will be 2 others in there because we'll go big cap, mid cap, small cap on those, and there might be a couple of bonuses as well. So definitely head to the webinar section of the website, register and tune in, and make sure you register for these other webinars as well, especially Ask the Experts, where you get to bring your portfolio to the table and ask me anything you like, and I'll give you on the spot fundamental and technical analysis. The disclaimer before I leave you today says that everything we've discussed is general in nature. Do your own research is the comment in brackets there. We are a regulated Australian broker. We do have some products that could see you lose more than you deposit, so it's important you understand all of these risks. The rest of the information in that disclaimer, and if you don't, please give us a call. That's it for me today. All the best for your trading until we catch up again. Bye-bye for now.